Good morning, everyone. Good morning, everyone. It is Monday morning, June 2nd, 2025. It is so good to see you all this beautiful and amazing Monday morning here in Austin, Texas. It is so good to be back with the team. Let's go ahead and do a sound check right here. 1, 2, 3 sound check. Let's go ahead and give me some thumbs up if you can hear me okay, if you can see me. So if you can hear me or see me, go ahead and please give me some thumbs up. Okay, good stuff. Harold, thank you so much. All good. You all look forward to going over our Monday morning touch point. Take a look at what the market is like. What's going on in the market? What's going on with inventory? What's going on with pricing? What are the leading lagging indicators? We have a lot to go over today, and it is so very good to be back with you all. I was in Florida all of last week. It was fantastic. I love Florida. Love going to Florida. We go there every year. I want to remind you that we do have a Wednesday meeting tomorrow. So Wednesday, tomorrow, Tuesday, no meeting tomorrow. Wednesday, we have our Zoom meeting. So be sure to join us for Wednesday. The team meeting is Thursday at ABOR, 9 a.m. mentorship, 10 a.m. team meeting, 9 a.m. mentorship Thursday. So we're actually going to move that to Thursday. I'm working with ABOR on adjusting the schedule, but it's going to be Thursday. I'm going to be in LA Friday. I've got to take the kiddo to LA on Friday. So thank you all so very much for being a little bit flexible, but I want to remind you that we have our team meeting on Thursday. And, you're going to get a bunch of emails, a bunch of reminders, text messages, emails, Facebook, you name it. You're going to be reminded of this 1,000 times. And let's go ahead and get started. Well, first, how are you all doing? Haven't seen you all in over a week. How are you all doing? Crazy weather here while I was gone, huh? Just amazing. I was keeping up with the news. Unbelievable weather. How are you all doing this beautiful morning? How are you doing, Sonia, Charmine, Manira, Melanie, Louise, Kristen, John D, Jack, Harold, Eloy, Zoom user, Violet? How are y'all doing? Sonia? Okay, good. More busy. That is good news. I love it. I love to hear that. Doing good. Thanks. Well, thank you for being here. Lots of leases. Yeah, a lot of leases going on. You're absolutely right about that. I am noticing a huge amount of traffic for leases on our website. A lot of leases on our website. And it was reported, I don't have the article here in front of me, but I can certainly dig that up for the Thursday meeting, that as a nation, we just saw a record number of properties fall through. Buyers are getting a little bit timid. We've got financing that's getting a little bit harder. And just unfortunately, a lot of deals are falling through right now. But we're going to go over some of that information. As you know, we are going to start by updating the amazing, reliable, always faithful new listing to pending ratio. This is where we take everything that is new on the market, we add everything that is back on the market, and then we divide it by everything that is active under contract and pending. And that's going to give us this very reliable ratio, where it simply tells us what is that difference between new on the market, back on the market, and properties that are being absorbed by the market. The way to look at it is that when you have a ratio of 0.5, that means that for every 2 properties entering the market, 1 is going under contract. So if you've got 1,000 listings coming on the market, 500 listings go under contract. Inventory therefore grows. If you've got a listing ratio over 1, that means that you have more properties going under contract in relation to the properties that are entering the market. It's a leading market indicator. Therefore, inventory is going to go down. First thing we're going to do is we're going to go backwards in time a little bit, and we're going to take a look at how many pending properties went pending over the past few weeks, because we know that agents can take a few weeks to update this information, especially new construction. Now, all of the new price increase, price drop, back on the market, active under contract, it locks in for this specific graph on Monday at 11:59. So when you look over this information tomorrow morning, all that information is going to be locked. But for the next few weeks, we're going to be updating this column, which is the pending column. And this number is going to go up to 416. Let's go ahead and update the 12th through the 19th. That's going to go, 540, that stays the same. 5 through the 12th, 549, that stays the same. Let me make sure that we go backwards in time just a little bit to make sure that everything is perfect. We've got 587, we've got 573, We've got 563. I'm just going to keep on going just a little bit. I just want to make sure that we always have, okay, so this goes up. Okay, this is perfect. 24, 625. Okay, this goes up to 625, 625. And I'm just going to go backwards on another month or so. Okay, 590. This changes to 590. And let's go 10 through the 17th. This goes 611. And I'm just going to finish on the 3rd to the 10th. And this is going to go to 521. Perfect. So now we've got everything is updated. Let's start updating from the 26th all the way through the 2nd. And on the number of new listings, we are looking at, okay, 1,093. 1,093 new listings from May 26th all the way through June 2nd. 1,093. Now, keep in mind that Memorial Day was May 26th, and we already had 1,093. I'd say we're going to end at about 1,150 or so. We're going to end at about 1,150. Let's take a look at price increase. Price increase, we're looking at 86. Wow, low number. Price decrease, we are looking at, wow, 1953. Ooh, whoa. Take a look at this. 96%. You all, have we ever seen a number that big? 96%. We're looking at this column, price decrease percentage. Some of y'all eagle eye people, help me out here. I'm not finding it. I am not finding it. 96%. Yeah, there's no way. As a matter of fact, I'm going to do a really quick formula right here just to make sure that we have. So I'm going to go equals minimum, and I'm going to highlight this entire column right here. And okay, so we have why do we have a 0? Okay, because it's kind of like doing one of these. And let's see, let's do percentage. Oh, max. I don't want minimum, I want max. Yep, that's it right there. 96%. We have hit a record high. When you look at everything that could go up in price in relation to everything that could go down in price, 96% went down in price. And I knew that was a record high. 96%. Whoa. Okay. Interesting. Back of the market. Let's take a look at back of the market. We're at 187. That drops down to 17 from 19. That went up to 19, which was interesting. We're at 17% back on the market. Active under contract. We're at 407. And pending. This is where you get to guess. I'm not even going to look at the number. I need 5 guesses. 5 guesses. Who's going to go first? 5 guesses. Number of pending. Properties that are pending. 5 people. Give me some guesses. Last week, 416. We know that we start the week a little bit on the low side. Harold kicking us off at 260. Followed by Charmaine at a slightly more bearish 200 or bullish 285. Sonia coming in at a bearish 237. We are 3 down, 2 to go. 3 down, 2 to go. Let's go ahead and just get 2 more people to give us some guesses on the number of pending properties. Sonia is the last one at 237. Violet coming in at a bearish 222. John D coming in at a astronomical 2015. Maybe you meant 205 or 250. Okay, 215, I'll take that. The number comes in at, let me check the box, 233. Coming in at exactly 0.5 ratio. Starting the week off at a 0.5 ratio. Now, we've been starting the week off under 0.5. We've been starting off at 0.44, 0.45, 0.47. The fact that we are starting the week off at 0.5, not terrible in relation to a 0.44, but you can see where we are. We've been trending on this blue. Blue equals what? Blue equals cold market. And you can see that even in the previous week, we're at a 0.58. That's going to go up to about a 0.60, but we had a 0.60 right there, 0.63, 0.66. We are in the substantial increase of inventory category. That's where we are. Let me go ahead and just update and review some of the monthly information here. All I have to do is update the monthly for May. This is going to go to 1719. So for the entire, and that's going to stay put at 1719, because even if I go to 1850, okay, that goes up to 0.59. It's not going to go up to 1850. So maybe 0.57, 0.58. That's where we're going to land. But you can see this is staggering figures. Is that for the month of May, 5,878 new listings, 626 price increases, 8,566 price drops, 93% ratio between price drop and price increase. We had 94% July, but we're at 93%, 55%. This is price drop divided by the number of active listings, 55%. Have we ever, okay, we hit a 59, we hit a 60 back in 2023, but we're at 55%. 15% back on the market, a little bit better than April, which is interesting. But take a look at the pending, 3,853 pending. May 2024, 4,232. So on the plus side of it, the difference between the active and new and back on the market, or active, not active, but new back on the market and active under contract pending, the difference is almost 3,000, 2,919. That is why inventory is going up. That's why number of active listings are going up by so much, because that gap, I mean, to put in perspective, you all, for every 2 listings entering the market, just about 1 is going under contract. For 1,000 listings entering the market, 570 are going under contract. That's why this ratio is so powerful, and that's why it's such a good leading market indicator, because it just tells us real time what's going to happen with inventory over the next 30, 60, 90 days. And we have a just continued gap between the new listings. It's just going up. We're going to review a few graphs here. And then the pending listings that are going down. So I went ahead and saved this. Let me go ahead and save it really quick. And let me close this off. And then after I close this off, I have to turn around. You're going to get a little side view here, because I have to open it up on a different computer. So I've got another computer right here next to me. I'm going to go ahead and just open this up on a completely, I have to wait until it like syncs and all that. So, okay, perfect. It's already here. We've got that 0.5. So what I'm going to do is I'm going to print this as a PDF using a different computer. It's just a lot easier to do it this way. Okay, so it's converting this to a PDF, and then we're going to look at the graphs, take a look at everything. We're going to look at inventory and everything else. But let me go ahead and just get this printed as a PDF so we can review some of the graphs, especially the monthly graphs. Now that everything is updated for the month of May, we can now take a look at the monthly graphs. Now it's uploading to the website so that we can go ahead and just click on the website. It's just going to take another 5 seconds or so for it to upload. And then we can access absolutely everything. Okay, good. So now it's uploaded. I can go to Insight and Statistics. I can scroll down a little bit and I can click on New Listing to Pending Ratio. And let's make sure it's updated. Perfect. It's updated. Let me go ahead and just make this a little bit bigger. I want to go ahead and save this and open it up as a PDF so it can just take over the entire screen and we can see absolutely everything. There we have it. So let's start looking at these numbers. Weekly residential year over year. We are down 94 listings, 7.9%, but this number is going to be on the positive side. Let's focus on the previous few weeks. We have been up double digits since the end of April on the number of new listings entering the market. And then when you look at the pending difference, We are double digit 2 weeks ago, May 19th, 18.7% drop on the number of properties under contract. We've been single digit as a percentage and then back to double digit. This is where you can see the ratio difference. Now, another interesting thing, take a look at the price increase and price drop year over year. Last year, this year, we have 64 less price increases. So last year, we had 64 more price increases. This year, we have 142 more price drops compared to the same exact week last year. 53 less back on the market, 150 less active under contract. On the active under contract and pending, I want to focus more on 2 weeks ago. Let's take a look at the monthly because we have enough data for the month to really look at what really happened for the month of May. And month over month, let's focus on year over year. Year over year, active listings up. This is only for the 6-county area. We're going to review the entire MLS here shortly. For the 6-county area, active listings were up 16.7%. New listings for the month of May, up 8%. April, we were up 10.7%. March, up 7.8%. February, down by only 2%. January, up by 19.9%. Price increase, down by 89 listings. Meaning last year we had 89 more price increases, May of 2024 compared to May 2025. And take a look at the price drop. So this May, we had 1,325 more price drops this May that just ended compared to May of last year. One more back on the market, insignificant. 78 less active under contract. We've been negative active under contract the entire year. So we are lagging for the first 5 months of the year last year on active under contract. We almost broke even April. We're only down by 1, but so far we're down by 301 on pending. This number is going to shrink a little bit, but at best it'll shrink down to negative 200. So we are down 379. We're down 9%. On sold, this is a figure that is just unbelievable. Take a look at April 2025 versus April 2024. On sold, down 25.6%. Withdrawn, up 99. Expired, up 80. And then you get to May, we are on sold, down 14.8%. That's going to improve a little bit, but it's going to be right around 10 to 12% on the negative. Just amazing. Take a look at the difference between the new and the pending. We've only had 1 month in the past 25 years where the difference between the new and pending was higher than we just had. This past May, 2,919. If we take everything that is new on the market minus everything that went under contract, we're on the positive side for new on the market of almost 3,000. We only had 1 month that was June of 2022 at 3,051, not that far off. And you can see that rate. This is for every single May. So we are 219.4% above average on the difference between new and pending for every single May. And you can take a look at this graph. This is the monthly comparison. Last May, 2112. And by the way, last May was almost the highest on record. 2002 was 2153. So May of last year was 2102. This past May, 2919. So it not only did it hit a new record, but it just exploded. And you can see that difference. We almost reached that June 2022 peak of 3,051. In June tends to be the month where new listings enter the market at a higher rate. So what in the world is going to happen this June when we are already noticing 25-year records being broken? So we've got someone unmuted themselves. Go for it.
It's Aaron. I was just wondering if Do we think it's an effect? Probably not, but it could be a little bit that, you know, people know the market or the peak of the market every annually is earlier during the year. So maybe we saw a little bit of rush on that. That's wishful thinking, I know.
So you're gonna have to repeat yourself. It got cut off really, really bad. I'm not sure if it's just me but I only heard about maybe 20% of what you said. I don't know if you're driving.
Just saying that. Yeah, I'll catch you later. Sorry, it's cutting out.
Yes, if you can get to a spot that you have better reception, we'll be able to answer that question. If someone heard the question, it was just me that didn't hear it. Please feel free to unmute yourself and relay the question. But I could only hear about maybe 10 to 15% of it. But yeah, try to get to an area that you can get better coverage, and love to be able to hear what you have to say and answer the question. But really interesting to see that number reaching a second record high going back 25 years. I really want to focus a lot on this data. Now, here we can see the ratio. And when you've got more new listings entering the market, you've got less properties being absorbed by the market, what's going to go down? The new listing to pending ratio. And we can see that May of last year, that ratio was 0.67, meaning for 1,000 properties that came on the market, 671 under contract. This May, just last month, that drops down to 0.57. That is a big drop right there. That's a huge drop. And you can see here that new listing to pending ratio at a 0.57. We are no doubt in that category of a substantial increase in inventory. And rates are staying steady. Rates, for the most part, went up a little bit at the beginning of 2024. This red line going down means rates go up. But for the most part, we've been pretty steady since 2023, end of 2022. Rates have been steady right around that, close to 6.875. What are rates like today? Let me go ahead and just pull up right there. Goes 6.875 rates today. And we're holding steady on rates, and yet demand is really going down. Here you can see price drops, 55.2%. And we're above the average. The average is right around 42%. This is price drop divided by active properties. 42% is the average going back a few years, and we are at 55.2%. Now let's take a look at the entire ratio for the month of May, 0.57. We have to go all the way back to 2010 to get a lower month, 0.52, and there's that 0.57. That's a 14.8% drop compared to May of last year, and we are 30.3% below average on that new listing to pending ratio. Let's take a look at active listings, and I am happy to report that we hit a record number of active listings for the month of May at 15,508. This is for the 6-county area, not the entire MLS. We're going to go over that information here shortly. But that's a substantial increase. That is a 7.3% month-over-month increase and a 14.3% year-over-year increase. Really amazing. Now, here are the number of active listings. We are 53.1% above average. And take a look at the number of new listings. 5,937 for the month of April. That was a huge increase from April of 2024, where we had 5,363. 5,441. Now, here's the interesting thing about new listings. Month over month, it actually dipped down a little bit. But the number of pending properties, it's down even more. That's why the ratio is down. 5,878 new listings only in the 6-county area. Now, to put in perspective, going back 4 years, we had less than 2,000 active listings on the market. So we are adding new listings at an exponential rate. It's really amazing to see what's happening. You take a look at new listings month over month, we're down 1%, but year over year, we're up 8%. New listings for the month of May, 5878. That's going to be the highest May on record. We're up 8%. There's that 8% year over year. We're 41% above average. Now take a look at the cumulative. This is everything. All new listings, January through May, 24,986, up 8.5%. From 2024, that was up 20.3%. That's a record high right there by quite a bit. When you take a look at the back of the market, 15.2, they're pending. Now, this is where I want to focus on pending. So far, 3,853 pending for the month of May. Now, April, we were down. March, we were down. I mean, take a look at the year over year. Down 9% for May, down 4%, down 2.3%, down 10.6%, down 10.6%, down 2.2%. The last time we were positive year over year was November. So we've been negative year over year on pending for 6 months now. And here's the pending for May. We're 5.7% below average. We're 9% year over year, 38.53. You ready for the cumulative? Take a look at the cumulative, 18,932. Now, do you remember how many active? Cumulative active? Cumulative active, 24,986. Pending, let's go pending. There we go. 18,932. What happens with the difference? Active listings. The difference become an increase in active listings. Now, what about pending per 100,000 people? Because we have to index this by population. 151, second lowest May on record, cumulative 744. That's going to tie us with 2003. Better than 2009, not as good as 2010 and 2011. So we're at 744, down 9.3% when you adjust it. This is where you take the difference between new listings and pending, cumulative difference. And take a look at this, 6,054. This is a year-to-date cumulative difference between new listings and pending listings. This means it's added to the number of active listings. It added to inventory. This is going to be one of the highest on record. This is going to be the second highest going back 25 years. The only other year that we are to, actually third highest, because 2004 was 65.65. 2003 was 81.28. I mean, look at that. Pendings just absolutely collapsed and inventory kept on going up. So this is going to be the third highest on record. Active minus pending. When you take a look at everything that's active on the market minus pending, you're looking at 11,655. That's a record high. Do you think a lot of new listings are new construction? No, they're actually not. The resale market is way ahead on the new construction market. When you look at the number of new listings entering the market, it's actually not. If you look at it as a percentage of inventory, new construction is actually going down. And the reason why is because builders are having a hard time selling new construction. So they're putting listings on the MLS, but they're keeping right now about 60% of those listings of their entire inventory as a shadow inventory. They're holding firm on pricing on the MLS, but they're negotiating a ton on off-MLS properties because they don't want those properties to become comps. So it's actually the other way around. What's driving this dramatic increase in inventory right now is not the new construction market. It's the resale market. That's what's driving the increase in inventory. Very good question. Active minus pending for the month of May, we're 105.2% above average. There's that 11,655, 28.7% increase year over year. Let's look at a few more right here. So total withdrawn and expired, that's going to be the highest number since 2008. That number just shot up. Almost 30% increase year over year on the number of withdrawn plus expired. 1,375 last year, 1,059. And let's keep on going. This is going to be withdrawn. Let's keep on going on. Let's take a look at sold. This is really eye-opening. Here's the good news. Good news is that we did way better May than we did April. April was a really brutal year on the number of sold properties. That number just absolutely plummeted. When you look at year over year, the month of April was down 25.6%. And then you've got May down year over year 14.8%, but thankfully month over month up 22.9%. So a fairly decent May compared to April. But when you look at it year over year, we're still down 14.8% on the number of sold properties. And here's a cumulative sold. 11,633 cumulative sold for the 6-county area, 11.1% decrease year over year, which is really amazing. Sold per 100,000 people. Look at April. April was the worst April on record. 87 sold per 100,000 people. I mean, it was worse than 2009 at 99. I mean, I'm going to double check these figures just to make sure they're accurate, because that just seems, I actually triple checked it, but I'll quadruple check it, but that's accurate. 106 for the month of May. 106 sold for the month of May. Just crazy. When you look at the cumulative sold per 100,000 people, we're at 457, down 13.1% year over year. Down 13.1% year over year cumulative sold per 100,000 people. So what does that mean for the ratio for the entire year? We're at a 0.66 ratio right now for the entire year. So far this year, the difference between new plus back on the market minus active under contract and pending is 9,788. To put that in perspective, the entire year of 2023, it was 9,273. The entire year of last year was 11,176. We're not even halfway through the year. This isn't July. This is June. And this is data for May. This is 5 months into the year. We are already plus 9,788, which means as of now, it looks like we're actually going to beat 2010. We're definitely going to beat 2009. We could very well beat 2008, where it was on a plus 18,308, because we're already plus 9,788. And this is only for the first 5 months of the year. Just absolutely amazing. Well, let's take a look at active inventory as of this morning, the entire MLS. So we focused on the 6-county area. Now we've got the entire MLS. We're at 17,294 active listings. That's down 83. Now, here's something really interesting. It's down 83 when the month turns over. Why is that interesting? Why do we have to know that? What usually happens when the month turns over? Someone unmute yourself, write it over chat, and I'll read it out loud. What happens with inventory when the month turns over?
Expired?
What's that?
Expired listings?
Bingo, that's exactly it. Expireds and withdrawns. And we just hit a record high on expireds and withdrawns. Thank you, Sonia. Take a look at what happened back in April 30th when we did a changeover to May 1st. That was down 127. This time around, down 83. So when you take all the new listings that enter the market and then you get rid of all the expireds and withdrawns, we're only down by 83 on a monthly turnover, which is a very high number. High meaning it should be less than 83, meaning it should be like down 150, not down by 83. On the weekly change, down by 43. Month over month, we're up by 974. So month over month, we're up by 5.97. Year over year, we're up by 18.6. Now take a look at the pending. At the beginning of last month, we were at 4,970. We're at 4,885 on May 2nd. We're at 47.77 right now. We're down 1.1% on pendings year over year. That's going to give us an activity index of 21.6%, 6.18 months of inventory. When you take a look at the number of active listings, we are just shy of record high territory in the number of active listings. I'll show you that graph. Out of all the active listings, 23.2% are new construction. And that goes to show that that number as a percentage is actually going down. Now, both of these, this is the activity index, pending divided by active plus pending. What do you notice here? We go over this every week, so you should have these borderline memorized. Both of these are going down. So the activity index, new construction activity index was 32, 33, 34%. We're at 31.86, far outperforming resale. Resale is 17.93%. I mean, this is in the cold territory. This is buyer's market territory on resale, like really extreme buyer's market territory. That's what's going on in the resale side of things. And let's keep on going here. Short sale, that number's up to 45 right now on short sale. Really decent activity index, though. People are putting short sales under contract. We've got 21 short sales under contract, but look at the price. $326,000, the average price on short sales. You can get some good deals on short sales right now. 31.82% activity index on short sale. We've got in foreclosure, really high activity index, 33.33%. Notice, I mean, all of the special listing condition, except for third-party approval, but the rest of these really nice high activity index. HUD owned a third activity index, very nice, very healthy, very high. So here's a leading and the lagging indicator, and you can see that the activity index, this is going to be the line in blue, that number is down. We're at August territory compared to last year. This is where you can take a look at the pending listings. We're down 1.1% on the number of pending listings. We always see this big drop when you go from the end of May towards June. Pendings tend to go down. Austin selling market, we have a very short selling cycle. It really is a April-May selling cycle. From the end of May, beginning of June, number of pendings tend to go down. We're noticing the same exact pattern this year. We were positive just a few days. We're positive one day right there on pending year over year. Now we're back to negative. We're down 1.1%. Let me take a look at how many pendings right now, because this is from early this morning. This data is from like really early this morning. So we're up a little bit on pendings. We're 47.93. When I pulled the data this morning, like at 4 a.m., it was 47.77. And to take a look at the year over year change on pending, we are negative, but thankfully we are over that average negative line. And here's the activity index at a very, very chilly 21.6% activity index. This time last year, we were at 24.9%. Now we hit, what is this? All the way back here. I need to put like a little, some sort of a label there to show us when it bottomed out and the number when it bottomed out. But that's going to give us just a little bit north of 21. This is 21.6, so that's probably about 21.4. And that didn't happen since the end of August. So we are approaching the same activity now as we did at the end of August, which is really fascinating. Months of inventory, 6.19. We are up 20.4% year over year. And we are only 43 listings shy of the highest number of active listings on record. The previous high was Monday, May 26 at 17,337. We're at 17,294 right now, only 43 listings away from record number of active listings. Now, right now, if I were to pull the number right now, we're down a little bit we're actually up. We're at 17,200. Okay, so we're down. We're down a little bit. We're 17,254 like right now, this very millisecond. So that number is going to go down a little bit. That's totally to be expected. Let's take a look at a few more things. Out of all the active listings on the market, 52.2% of those have had a price decrease. And you can see the activity index in months of inventory. As we move closer to this cold activity index, months of inventory will indeed go up. These are dots for the top 30 cities. And then here, the top 75 zip codes. So let's take a look at activity index. And you've got the city of Austin at 18.5% activity index. You've got, wow, which is really low. 18.5 is low, very low. Buda doing well. Buda just doing very, very well at 30.8% activity index. Lago Vista, super chilly. Spicewood, only 7.3% activity index. We've got, Round Rock, Pflugerville holding steady, very close to that 25%. That's going to put you right there at that 4 months of inventory. That's holding steady. Now, look at the difference in inventory between new construction and resale, and look at the difference in activity index on new construction and resale. And some of these are just incredible. Really amazing to see this. You take a look at Del Valley. Let's focus on Del Valley. Del Valley has a 34% activity index on new construction, only 2.11 months of inventory on new construction. You can see there Del Valley. Resale, 10.59 months of inventory. So the resale market in Del Valley has 402% more inventory on months of inventory than the new construction. So this is very powerful when you go into that listing presentation. This is now the chart that I'm referencing. I get those emails all the time, those text messages. Dan, I just don't get it. Just put this house on the market. We are priced competitively. But the thing is this, when you say you're priced competitively, if you're comparing that to new construction, you are not priced competitively. You are 10% overpriced because we know that builder's offering that 10% offer to the buyer as a rate buy down, as a 3-2-1 buy down, with a rate concession, with a bonus, washer, dryer, it's a brand new house, and all of that. So if you're priced exactly the same, you're 10% overpriced. And that's what's happening. You take a look at Del Valley, 10.59. Let's look at a few more. Anytime you see something in bold, you see this is bold, this is bold, this is bold, 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 bold. Bold, bold. You know what bold means? Bold means that you've got 100% more inventory or more. You've got double inventory. That's what bold means. Now, other ones, you've got less inventory. So take a look at Lago Vista. Lago Vista is a complete opposite. Even though the activity index in Lago Vista is better on new construction, you've got more inventory than you do on the resale side of things, which is interesting. What other ones? You've got Lakeway. You've got more new construction inventory. Leander, you've got more new construction inventory in Leander than you do on resale. Now, when you've got a number that's that close together, 5.4, 8.5, really these two, Lakeway and Leander, it can be a little bit deceptive. And here's why. Because on the new construction side of things, you've got a property that could very well stay pending for like 6 months. So it's going to artificially increase the activity index because that property goes under contract. They're building the home. It's pending for 6 months. So it's going to show more activity index. It's going to show a healthier leading indicator, but it's new construction. So it's slightly, you've got to take that into account. Just keep that in mind. What are some of the record highs and some of the record lows on activity index? Record lows, we've got Del Valley. Del Valley just hit a 12-month low on activity index at 26.2. We don't have any record highs. We've got Lakeway, 10.9. Leander, record low, 21. Lockhart, 23. Maynard, 22, man. Maynard just collapsed. Maynard was 38% in December, drops down to 22%. You got Pflugerville. Look at that. Pflugerville went from 35.7% to 24.2%. Round Rock is down in the past 3 months quite a bit from 31% activity index to 24.9%. So we got quite a few record low numbers. Unfortunately, no record high numbers. Months of inventory. Let's take a look at months of inventory. We've got Dale, 11 months of inventory. That's just holding steady. Lago Vista, 11 months. Marble Falls, Spicewood, 11 months. And here you can see best performing city, Kyle. Second best, Buda. Lowest performing city, Spicewood. Then you got Lago Vista, Lakeway, Smithville. Let's take a look at activity index for zip codes. You've got 78701 leading us off at 9.5% activity index. Very, very low. Let's focus on highs and lows. Let's focus on highs and lows for a nice little bump on activity index for downtown Austin, 6.5% to 9.5%. I'll take that. So we're going to focus on highs and lows. We've got 2.3 hitting a low as 17.9. You've got 2.7 hitting a low as 17.2. I don't see any highs yet. Oh, wow. 3.5. 3.5. Activity in 3.5 drops by 2/3 this year alone. We're at 10.5% activity index in 78735. We were at 31.8 October. We're at 10.5. That is a substantial drop right there. If you got a listing in 3.5, something to be aware of. 3.9 was the best performing zip code for the longest time, a staggering 58.1% activity index. That's down to 32.2% activity index. Not quite a low. That was last year at 28, but a pretty big drop. 4.1, that just hit a 12-month low at 9.4. You've got 4.7. I'm not seeing any record highs. I'm seeing a lot of dots at the bottom end of the scale. 5.3, 4.9. Del Valle, of course, we've been talking about that. Manor. So seeing a lot of lows, not quite seeing any record highs. Buda holding steady. Buda doing very well. What's going on with Buda? For those who are Buda market experts, well, what's going on with Buda? Attractive pricing? What's going on? What are y'all noticing out there? Like, boots on the grounds. Data will only communicate so much. Like, what are y'all noticing like boots on the ground? Melanie, go for it.
So you mentioned Kyle as well. So I don't know about Buda, but Kyle definitely has very attractive deals on the new construction side. The 3.99, 4.5% interest with D.R. Horton plus closing costs, plus appliances, plus blinds for and you can get 1,800, 1,850 square feet for like 320 new with D.R. Horton. So I know that's going on. And D.R. Horton has a ton of neighborhoods out there, a ton.
Okay, good to know. Good insight right there. And there's that new construction activity index at 43.8%. Really, really good insight. People don't want to be in Austin anymore. Buda is super close. Some great shopping and restaurants, quaint and small, but big at the same time. There you go. Good insight. Thank you, Sonia. Let's take a look at, we spoke about activity index. Let's take a look at inventory. We've got 2.7 inventory, just about doubles. Really amazing. Now, let's take a look at type of market. When you look at type of market, 13 cities are still in a seller's market. Let's take a look at the breakdown between those 13 cities. You've got some cities are very close to a buyer's market. You've got Driftwood, Bastrop, and Taylor. Those are going to be the really, really close to a buyer's market. The cities that are darn close to a neutral market, you got Manor, Georgetown, Lockhart, kind of Kyle in a way, just bordering on that neutral market. Huddle doing very well, 3.53. Let's take a look at zip code. 43% of zip code seller's market, 29%, 22% in a neutral market. These numbers are going to shift over the next few weeks because we are noticing record low activity index. That's going to be your leading market indicator. months of inventory is going to be your lagging market indicator. That's going to take 30 to 60 days to catch up to the leading market indicator, which is the activity index. So I do foresee some of these zip codes transitioning over to a different market fairly quickly. And you can see that Maynard just transitioned over to a neutral market, and you've got 4833, Lockhart 54, and I would even add Del Valley very close to transitioning to a neutral market. And which ones ought to be transitioning to a buyer's market? Now, we've got a few weeks to go on that. You've got 3 zip codes that are competing with each other. You've got 3653 and 03, very close to that 6 3/4 months of inventory. And by the way, I don't use 6 months as a buyer's market. I know a lot of people, I use 7 months as a buyer's market because at 6 months of inventory, there's still enough competition there for me not to declare that a buyer's market. I want to know for a fact that we're in a buyer's market for that zip code before I call it into a buyer's market. That's why I went ahead and raised this line up to 7 months of inventory. You could just hear, it's totally arbitrary. Like people can just kind of say whatever they want, but I do not use 6 months as a line to transition to a buyer's market. I use 7 months. I want to be 100% sure that it really is a buyer's market before I call it a buyer's market. Let's take a look at the percentage difference. So year over year, Lockhart has 88.5 increase in inventory. Gerald, Driftwood, Marble Falls, 62. Which cities are down? Del Valley's down by 2.4. Dripping Springs down by 4.8. Cedar Creek down by 8.7. This is year over year. Wimberley, unbelievable, down 33.1 in inventory. When you look at year to date, January to today, we've got Marble Falls up 120%. Hard to believe that year to date, Marble Falls went from 4.98 to 11. Then you've got Cedar Park went from 1.93 to 3.77. On the bottom end, you've got Hutto really doing well from 4.9 down to 3.53. When you look at zip code, this is a really amazing figure. You take a look at 2.6. 2.6 went year over year from 3.56 months of inventory to 8. 125% increase in the 2.6. On the year to date, I just can't get over 3.9. I mean, 3.9 was the hottest, craziest seller's market January of this year at only 0.96 months of inventory. You're still in a buyer's market at 3.62, but that's a 282.9% increase in inventory, in months of inventory in a very short period of time. So really interesting. On the bottom end of things, you've got, okay, Bertram. Don't really care about Bertram. Nothing personal, but I really don't care. You've got Hutto. Hutto's down 46.1% year to date. 2.4 on year over year, down 34.4%. Let's take a look at sales. This is the just about final sales figure for the entire month of May, 2,737. Really amazing. 2,700. This is for the 6-county area. Keep that in mind. It's for the 6-county area. And you've got number of sold properties per 100,000 people month over month change. Oh, let's kind of keep on looking at a few more things. Let me do this one. Okay, we got 2737, 6.4% increase. Year over year, we're down 15.1. So we've been negative 4 months in a row, year over year. And you can see that every single one of these dots, this is going to be the month of May. So look at that. I mean, just amazing just to see what happens. When you look at cumulative sold from January through May, we are 8% above average, not adjusted for population, but we're down 10.5% year over year. We've had 11,755 sold properties, January through May. When you adjust this for population, this is just super eye-opening. 107.13. 107.13. To put that in perspective, adjusted for population, well, sometimes you just have to read the news for what it is. It's the worst May on record, adjusted for population at 107.1. That number is going to go up a little bit. I don't think it's going to cross 108.8. That was 2009. We're at 107.1 adjusted for
Had the
population.
worst May on record for sold properties adjusted for 100,000 population.
Yeah. Pretty crazy, huh? Pretty amazing. Well, which is why inventory is increasing. Now, we knew that was going to happen because the pendings were down. The pendings were down by 15%. So that's the whole thing where you just have to be obsessed with leading market indicators. If pendings are down by 15%, I know that solds are going to be down by 16, 17, 18% over the next 30, 60 days. Because if something doesn't go pending, it's not going to sell. That's why we are obsessed with leading market indicators. When you look at the cumulative, everything that's ever sold January through May, adjusted for 100,000 people, we are 20.1% below average. Not the worst year to date on record. That is reserved for 2009, 2011. We had a better first quarter this year, adjusted for population, than 2008 and 2011. Those two market corrections were more sustained throughout every single month. On our side of the things this year, we just kind of hit a wall this past month, and it's been trickling in. And it's just like the number of sold properties just about hit a wall here. And you can see that by these double-digit year-over-year drops, 17%, 16%, 9%, 16%. So big drop on the number of sold properties. On the 17.1, we've got 1, 2, 3. You only have 3 years worse. You got 2008, 2009, and then, of course, 2020. We know what happened that. That's when the sickness happened and everyone just terminated their contracts or got fired, couldn't qualify. That was an absolute nightmare. That's why we had that 33.8% drop right there. But if you get rid of that one, it's going to be the third highest year-over-year drop as a percentage. Now, the other thing to keep in mind is that that's a 17.1% drop from a 6.3, from a 7.4, from a 9.4. That's why you see this line that just keeps on going down. So we're clearly in correction territory, no doubt about that. We ended the month at 18,377 realtors. When you adjust the number of closed properties to number of realtors, 148.9. So for realtors, that's an 11.3% drop. Y'all, I look at this information. I could not be more proud of you all. I could not ask for a better group of people to be in business with, because I am reviewing a lot of transactions. I'm having conversations with you all. You're like, man, I'm so grateful. Like, like you are doing amazing. I mean, as a team, I just could not be more proud of you all. Just could not be more proud of you all. When you look at the cumulative sold per 1,000 realtors, January through May, 632. Once again, not the worst on record. That's good. That was reserved for 2009. Now let's take a look at the percentile analysis. Bottom 25th percentile and top 25th percentile. Both of them are down on price. The top 25th percentile, when you look at the price year over year, that's down 1.2. Price per foot, that's down 2.4. On the bottom 25th percentile, that's down 2.9 on price, 3.2 on price per foot. So, but they are both negative. When you see a red dot, that means that the top 25th percentile is underperforming on price difference between last year and this year than the bottom 25th percentile. That's what that means. That means, for the most part, like, it's fairly accurate that the forecast for that city and then for that zip code is that prices are going to go down pretty fast, because what's been propping up the market so much over the past 18 months is the top 25th percentile. When all of a sudden that inverses and starts going down, and it starts going down by quite a bit. You take a look at, let's look at a few. Take a look at Cedar Park. This on the price side, we're up 2.8%, but on the price per foot, we're down 6.7%. When that price on the top 25th percentile is now negative, under, that's when Cedar Park goes down in price. So really interesting to look at it that way. You take a look at Gerald. Gerald's going to go down in price. I'll tell you right now, you can expect another very quickly. In the next 12 months, you can expect a 6 to 8% price correction in Gerald all day long, because the top 25th percentile is going down at such an accelerated rate compared to the bottom 25th percentile. We also have this information for zip codes. Expect prices to go down in 01, in 05. Wow, 05 is just insane. 05 top 25th percentiles, just unbelievable, from 615 2024 to 341. So that entire price bracket is going to go down. So take a look at this resource. You can find this on the high and low under percentile analysis. And of course, let's take a look at pricing. We are ending May with a month-over-month increase in pricing, $11,623. That's going to be the month-over-month. May of 2024, we ended at $593,936. May 2025, we're currently at $597,846. That's going to be adjusted a little bit as agents continue to close out deals. But you can see the difference on the number of sold properties. You got negative 487, that's down 15.1%. Last year, we had 3224. This year, 2737. That's what's driving that number of sold properties per 100,000 people so extremely low. You can see that the average sold price, surprisingly, for the month of May is holding steady. So we were down 0.6%, 2023 to 2024. Then we're up 0.7%, 2024 to 25. You cannot say the same thing on the median side. That's going down 1.3 and then 1.1 on the median side of things. If today is the absolute bottom of the market, you can expect the market to return to peak value August of 2029. That's 52 months from now. That's using the compound appreciation of 4.981%. And let's take a look at the pricing for the entire year. The average price is actually up for the entire year when you look at every single property that has sold so far this year, and you look at the average price for every single property. We are up $3,402. On the median side of things, though, we are down close to $7,000. We're down 1.6%. Sold to list price ratio, just slightly better this year than last year, which is slightly better than the year before, 97.4%. And let's take a look at just a few more things, and then we're going to call it a day because it's already 11:03. Freddie Mac House Price Index. This was just published May 30th. This is where it reviews the top 40 cities for population, and then it reviews every single city. And you can see that the Austin area is number one on the list. And let's take a look at this. Drop from peak, number one on the list, Austin at 14.4% drop using the Freddie Mac House Price Index figures. Super accurate, very reliable, going back to the 80s. San Francisco, number two at 3.6%. You've got Dallas. Dallas is now negative 0.9%. You've got San Antonio down 3%. When you look at from January 2020, Austin is still up 42.3%. When you look at from January 2021, Austin is second on the list. So from the bottom up. So we're at 19.6%. But when you look at from April 2022, and this is for April figures. This is not May. It was published in May for the month of April. From April 2022 to April 2025, City of Austin down 13.3, followed by San Francisco at 3.6, Sacramento at 1.8. And let's keep on going here. Year over year. Man, I love being number one. Austin, 4.5%. Thankfully, month over month, Austin is not number one on the list. Tampa is going to take that leading role at a 3.2% month over month decrease in price, followed by San Antonio, and then followed by Austin at 2.8%. And you can see, let's keep on scrolling, give you some additional data and information. So this goes all the way back to 1975, and you can see that we are in this correction mode. This is for the city of Austin, and you can see where we are right here. We bottomed out May 2023 at a year-over-year drop of 10.16, and we're still negative, but thankfully nowhere close to the 10.6. Excuse me. Let's drink some water here. Now, the previous chart is for the top 40 cities. This right here is for every city, all 384. And you can see that we are number one for all 384 cities. And out of the 384 cities, 270 reach peak value. That's 70%. So 70% of the 384 cities that are tracked by Freddie Mac reached peak value, which is just absolutely amazing. Let's take a look really quick at the economic calendar, see what we can expect this week. Some fairly decent news here so far. We've got better than expected 6-month T-bill, better than expected 3-month. You've got a decrease in manufacturing prices. This is welcome news because they were expecting an increase from the previous and actually went down. We had good news last week on inflation data. Construction spending, that is down. And if you take a look at the screen behind me, a fairly good past 5 days when it comes to the bond market. Still a little bit higher than I certainly would want it to be, but there's nothing that I can certainly do about that. But a little bit better than expected. Atlanta Fed GDP now, they increased their GDP forecast from 3.8 to 4.6. That's a preliminary figure. Tomorrow, fairly important day. We've got JOLT, job opening, labor turnover. We've got economic optimism by the Investor Business Daily. We've got a lot of employment information that's going to come out this week, manufacturing information. The big one is going to be combination of Thursday, but more so on Friday, where we have employment data. That comes out on Friday. So it's going to be a very volatile week for the bond market. We do have rates at 6.875 holding steady. But I do want to remind you that we do have our meeting on Thursday at the Austin Board of Realtors. So we've got our Thursday team meeting at the Austin Board of Realtors, 9 a.m. mentorship, and 10 a.m. at ABOR for our team meeting. So that right there, my friends, is going to conclude our Monday morning touch point. Bottom line, we are still in very much a correcting market. Okay, the market continues to correct. So we do have a question. I missed the beginning. Will it be on Thursdays every time from now on? Yeah, I'm working with ABOR to see what their schedule and availability is, but I want to move everything to Thursday. I am finalizing some of that with ABOR, so I'll definitely keep you posted like really, really quickly. Just got a reminder that we need to start thinking about market report letter wording. Yeah, very good point. I'll put together a market report template for you all for next market report. Thank you so much. If you could send me an email, that would be amazing because my email is basically my to-do list. Thank you so very much. Super appreciate it. Want to remind you all that you can get all this information on Insight in Statistics. Take a look at everything. Lots of really good information right here. And we are also publishing every single morning right here, the daily market snapshot. This is just a daily compilation of the most important figures that we go over. We do a really nice summary. And then you've got this one report that covers everything. So if you're ever wondering like, oh, there's so much information, you do 2,000 pages of data. I just want like the top reports. This is it. And this is compiled for you every single day, and Monday through Friday, every single day. Are we meeting Wednesday as well? Yes, we are meeting Wednesday over Zoom, 10 a.m. Wednesday. And then we're going to have our Thursday team meeting at ABOR, 9 a.m. mentorship, 10 a.m. at ABOR. So yeah, we are meeting Wednesday. Absolutely. Very good question. So take a look at this daily briefing that we put together. Really excited about this. If you just need something just to send to your people, send it to your clients, go to a listing presentation, and you just need that snapshot. Get rid of the clutter. I don't need 2,000 pages. I just need like that one little packet that I can just take it with me to an open house, to a listing presentation, send it to someone. Yo, this is a great resource just to, download this, create your own social media posting, create your own article. For those of you who are doing articles, way to go. Really way to go. Kristen, you do a lot of articles. Really amazing, exceptional job doing those. Website's doing really, really well. We're getting a lot of really good traffic. Had a meeting last week to prep for, and the daily report was very helpful. Awesome. Good stuff. I'm so glad that you're using it, Kevin. It's just a really good, I just want one snapshot, way too much information. And here's the other really neat thing is that any one of these, these are all links, right? So if you want the additional report on Lakeway, click on Lakeway. It'll take you directly to Lakeway. So these are all hyperlinks. It'll take you to absolutely everything. So really excited to be offering you these resources. Yo, if you have any more questions, comments, concerns, criticisms, complaints, please reach out. I use the data analysis report for a listing presentation. Good stuff. Okay, this is the data analysis. You go to market update, you go to data and analysis, and you can just click on whatever zip code, and there's a report. And we've got this for the top 75 zip codes, top 30 cities. We update this once again, y'all, 5 days a week, Monday through Friday. Usually by the time you wake up, this information is updated. So really excited to be offering this for you all. I love, love, love these resources. Couldn't do real estate without these resources. Just could not do it. And there you have it. If you have any questions, comments, concerns, criticisms, complaints, please reach out. And thank you for joining our Monday morning market update, our Monday morning touch point. Be on the lookout for a summary of all this information along with a link to this recording. If you have any questions, give me a call and I will chat with you later. See you Wednesday and then see you Thursday.